Start. All right, but real quick, let me just intro this. So basically, with all the stuff going on with Iran and how these deals are kind of working out, and how we're potentially on the brink of World War III, or whether or not, we're gonna kind of discuss that in depth now. How that relates to the stock market and stuff like that. Okay, so go ahead and say what you're saying.
So I was watching this brief lecture on what is geopolitics and why does it matter. And the guy just said, when we acknowledge that we might be wrong, we can think deep enough to be actually right.
What does that mean?
Like, all of our theories, they probably will be wrong, but once we accept that and we're just theorizing, then we might actually stumble on the right theory. It sounded cool. When I'm saying it out loud, it sounds stupid, but still.
Well, he said it, and it sounded cool to you, so... I mean, ideally, the idea is that if you make enough, predictions, one of them is bound to be true. That's just a numbers game.
Yeah, but the way he said it. Okay, anyway, our plan right now, it should be to, I guess, understand what everyone's angle is on the entire Iran problem and see how it could pan out and how we can profit.
Mm-hmm. Right.
Okay. So what do you guys know about the conflict so far? If anything.
You have anything?
What's up? No, I'm looking at some charts right now. Roku's doing really well, volume-wise. You see this?
What's the volume? Oh, Jesus.
Do you see that?
Yeah. What's that level? 144?
Yeah.
I'd rather stream this. Well, it just got rejected. Isn't 144 a level now?
Yeah.
Check the options on it. How are those reacted already?
It went from 136 today
to
143, so you can imagine. But let's stay on topic. What was the question?
Harsha, ask the question again.
Yeah, so what do you guys know about the entire conflict so far?
4.75%. 1 second.
The general was
This
killed,
is really bad.
Right? What?
It's up 4.75%, 4.8%. Why are the options only about 44%?
Well, check the lowest here today.
Wait, what's the trading app you guys use again?
That's really bad, actually. Hold on, I'm sorry. It's because of the IV. The IV is ridiculous right now. It's 85. It's 3 times more than usual. Okay, so what's going on right now is Monteser's looking at Roku. So Roku's up 4.8% right now, but the options aren't reacting properly. So that's why. It's actually, why is this required?
What are they supposed to do?
That's the thing. It's like the options should be doing a lot better. God damn it! I forgot that they had this.
What platform are you guys using again to look at the options?
We usually use
Robinhood shows the percentages immediately. So I go to Robinhood when I'm trying to get a quick amount on the percentage change. We check the lows and then we check that. So at that rate, it's only about 100%. So that's actually really not that great. That's really weird. Why is that? Yeah. Oh, let me actually see what's going on with Roku.
This is a stupid question, but why do you think it should be up more? Sorry.
Because it's up 4.8%.
Yeah, but isn't there much more to option pricing than that?
Yeah, typically, but if you're up 4.8%, what is your probability of being in that same strike? It goes up. That's the point. So when you have a significant increase in being in the money, the value of the option skyrockets. So whenever something moves up a lot, there's so as far as the Black-Scholes model goes, there's a lot of different components in it. Like, one of the reasons why the options are moving up properly has to do with, I think, the IV. The IV's at 85% right now, so it's calculating in that much of a move, and so the options are reacting in a very peculiar way relative to that. So that is what's kind of throwing me off right now in this. So I think that's kind of important. Are you looking at the option chain right now?
Yeah, I am.
Are you?
Okay. So, no, I don't know. If IV is up... Yeah. Okay, I honestly don't know that much about option pricing, so I don't know if this is right or wrong. I'll just learn from you guys.
Yeah, so I mean, I don't know. It's just the option pricing is like kind of whack right now. So, because I'm looking at the chain, and it's not nearly reactive as it should be. I mean, so when you see a 5% move, you usually see about 1,000% gains on those, especially with Roku, because Roku's a mover. And
What the hell?
yeah, it happens all the time. But 5% moves don't happen all the time, and you can't predict when they happen. So how would you end up making anything? But they're only about 40% up. So it's kind of weird. I mean, theoretically, not necessarily that way because it's like the low of day on, for example, the into money ones are $300, and now it's worth about well, the high is now 570. It's currently worth about 530, which is more, but that still doesn't compute with what the percent change is on these. So that's kind of what's getting me right now on these. So that's kind of weird. So if you're, I don't know,
Yeah.
I don't know how to really take this information right now. I'll have to look it up, but yeah, it is particularly peculiar.
So what are you thinking about the Iran war or impeding doom?
That's what he's asking. He's asking what do we know about the setup so far?
Well, we don't have it. Any information we get, it'll be delayed, or we'll see it in futures, right?
Mm-hmm.
And we're in actually a good spot because nothing has really happened yet, in the sense that the SPY has always been bouncing on 320, and it hasn't gone below that yet. But the moment it does, the put premium will kind of skyrocket. And so what I think is that we can prep for this before the premiums get too high by putting in a debit spread below 320. So just in case any bad news comes out with Iran, we'll be good with that and we can take advantage of that. But then after that, we're going to have to figure out if this is going to be an actual trend downwards or not, based on the news, right? Because we can't really think too far ahead. Based on the option pricing, we always want to be like 2 weeks out. That's like the ideal time where you can like invest into the option chain without losing like that fully, without just losing on time decay actually. So 2 weeks is a good benchmark to put some debit spreads on the downside. And if you look at the daily chart right now on SPY, it's just kind of going sideways, but it's still pretty bullish. It's like consolidating. So that's what I think.
About the market, what about the actual event?
Big
Wait,
impacts, man.
really?
I don't know. I honestly don't know. Like nuclear wars, what could happen? I have no idea.
Quick proposal: would a backspread work with this?
A back spread?
Yeah.
Like a calendar spread, or
Well, I read this in the textbook. It said a backspread is when it's a delta neutral spread which consists of. You guys know what backspreads are, but it's when.
No, I actually have no idea what a back spread is.
You know what a backspread is?
I don't.
No.
I don't think I know about what it is with that. Maybe I don't know the name.
Is
Essentially, with the backspread, that position, if the market goes up a lot, you can make a lot of money. But if the market tanks, then you still make some money, but it's not as much.
So essentially it's sell one in the money call, buy two out the money calls. That's it.
I guess.
That's apparently that's a call back spread. The put back spread is the reverse.
Yeah, it's gonna be reverse. Yeah.
So
you think we could play that? Kind of, maybe.
Sell one in the money.
So you sell one in the money, which means
buy two out of the money.
Let me think. So the one in the money has a high risk, though. No, it doesn't because it's in the money already. The amount that it could go up has a cap, technically. Well, no, the distance between the distance between two of them has a cap, but not the actual option itself.
I think actually even for that to be executed on our accounts, we need to have some like option level 3 trading. I feel like because we can't, we can only sell one and buy one. So far as I know, we can never like buy. Actually, wait, buy 2 and then sell 1?
It says sell 1, buy 2. So yeah,
oh, no,
yeah,
no,
you can do that. You can do
You
that.
can't do that. Yeah, never mind.
So what do you guys think about that? Do you think we
Well,
could?
I don't know how
I'm reading about
works.
it. The callback spread profits when the stock price makes a strong move to the upside beyond the upper break-even point. Oh, okay. So it caps out the risk because if you're wrong, your in the money call is more expensive by nature. So
in a back spread, the only way you can lose money if there is no movement, then all of your calls expire worthless or something, and then you just lose money.
so there's 2 ways to lose money. If there is no movement or it moves down. In a call spread.
No. With the back spread, if it moves down, you're still good. Like it moves down a lot.
If it moves down, you'd make money on the premium you sell in the money.
Yeah.
So what is actually
This
what,
is that's
lag
neutral. That's neutral.
Wait, let me send
so
you a picture of how the options chart looks like.
Yeah, so which leg is higher? Like, are you supposed to?
Well, the out the money's two out to the out the money's
Like, do they equal each other? Is that
no. I think maybe. Okay, so maximum profits unlimited. Profit is achieved when the underlying price is greater than or equal to 2 times the strike of the price of the long call, minus the strike of the short call, plus or minus the net premium paid to receive. So
Okay, look at the picture.
yeah, I'm reading this exact thing.
Hey, that's good. I'm reading that too.
Typical back spreads and their values at expiration are shown in figure 8.5. Yeah, let me at least show it up here so it can be seen in the video. So it says it's delta neutral.
Mm-hmm.
Essentially, you're selling an at the money short spread in order to. So you're shorting the at the monies to help pay for the extra out of the money long puts. So is ready for small net credit whenever possible. That makes sense. For dead wrong, the stock makes a bullish move. You can still
More
make a
credit
small
than
profit.
debit.
Yeah. Well, that makes sense too, right?
Damn, I'm still totally new to options.
When market collapse?
If the market collapses in the case of a callback spread, then I assume that the credit would be higher than your buys. And
But
you'd still
only
make
at that
money.
point is when you buy it. So you don't make money when there's certain points when sell the lower exercise price. So when you sell the lower exercise price, so if you long,
Okay. I think we all have to learn a bit more about back spreads first.
well, yeah, I mean, because this doesn't also, I don't think it necessarily computes with what's going on.
What's the right environment that this should be used in?
Yeah.
Like,
Yeah.
does it say
We don't know enough to know if this is the right move.
If you own a volatile stock,
now.
this is a trade you might want to consider when they're major. If you expect the outcome to be negative. Okay, here we go. So this is a trade you might want to consider just prior to a major news event if you expect the outcome to be negative. Examples include an FDA rejection of a miracle drug on a pharmaceutical stock.
Interesting.
So when that happens,
yeah,
this might actually fit.
With puts, is that what it's saying?
Well, it's just saying the options sell, but it makes sense if it's a put. So you have to do the reverse of this, I think. Yeah, okay. I'm looking at back spreads with puts. There's a certain back spreads with calls, which is the opposite.
No, yeah, it is. Because if you're...
Why would we do... I mean, well, it depends. Were we expecting the market to take off because of this? Okay, so we're getting ahead of ourselves, and one key feature is the fundamentals of this, right? So, like, fundamentally, what would a potential war, like not a tariff war or anything, but like an actual war, do?
Can we...
Yeah, so what theories are going on with that? There's no actual war that's going to happen, but there's going to be stuff like cyber war and like blockades and shit like that. Apparently, even with the Vietnam and like all those wars that America was supposed to be a part of.
Mm-hmm.
The last time Congress declared war was in World War II. So there's not going to be a specific war, but there's going to be like effects in other industries because of other actions that countries take. But it won't be like a all-out war. There's going to be too much damage on either side for it to be worth it.
Yeah.
That's everyone's general consensus, but also a lot of people didn't think Donald Trump would get elected. So I can't necessarily agree with
in
the.
general, if
But
a war
this
does happen, then certain industries will take a hit or not. Like subsidies will come in, and that affects a lot of these. Like,
Yeah. So what does the threat of war indicate? Right. So we can let's think back to what is the most recent threat of war we've ever had. I mean, I would say maybe like the Persian Gulf War, but there's something I think a little more specific that's a lot more catastrophic. Do you guys? I'm trying to remember. Do you guys remember?
Isn't it,
1960s?
It's definitely the Middle East.
No, it's not.
What?
It's Cuba. Cuban Missile Crisis.
Bro, that's so old.
It's extremely important though. Do you guys remember what happened?
Oh,
I don't know.
So we didn't even attack at the time for that war, but it was extremely tense for like 13 days, 14 days. But basically, in Turkey, we had missiles. We had nuclear missiles in Turkey, and Russia had missiles in Cuba, and Cuba had pointed it at the U.S.
The thing is, dude, with the Cuban Missile Crisis, we're directly against another superpower. In this case, China and Russia have no like value of supporting Iran.
I don't think you're. Oh, first of all, that's not true. Second of all, I don't think you're getting it. I think what you need to pay attention to is the first move has already taken place. So the threat of war does not. The location from which the war comes from is not as impactful as whether or not there is a genuine threat of war and who the allies are. The allies and the enemies haven't changed over the last 70 years. So
okay, in this case, who's Iran's allies then?
Iran is not our ally. Oh, who are Iran's allies?
What would be the size?
Okay, well, what do we know? We know that for some reason Germany declared war on France. We know that. Okay, so let me think.
Wait, hold on. What are you talking about? Are you talking about World War II?
No, I'm talking about this.
Germany?
Yeah, everyone's really confused.
Wait, hold on. Why did Germany declare war on France? I'm so lost.
Did you find it?
No?
Is that recent?
Yeah.
When?
Germany declared war on France. 2020.
That's... What?
Hold on.
Bro, I don't know where you're getting that.
I don't know why.
So within the last 6 days.
Somehow. But that doesn't make any sense.
Yeah, I don't know where you got that from.
Hold on. Why did this keep appearing?
Yeah, it was in my Google autocomplete. But I don't think that's true. For various reasons.
Yeah, I know. It doesn't make sense. Let me be sure of it right now.
Bro, we can make a meme from that.
I'm pretty sure there has been. It's probably where it came from.
Of Germany and France declaring war?
Yeah.
It's a lot of World War III memes. I wonder if this is a thing to look out for.
Memes?
Yeah, making money off of memes.
That does not work. However, you can use memes to kind of dissect what's actually going on.
How? No, people who make memes are retarded. They have no idea what's actually happening.
You'd be surprised.
How so? How would I be surprised?
Because memes are a form of communication.
Yeah, they are. But when the
So
people
what makes them
are not
retarded if they?
informed,
What about the ones that you read maybe are retarded, but what about the ones that are effectively explaining ideas in very short and almost like subverted ways? Like people are getting messages out in the
they
form of
actually make
memes.
memes.
Like the Jerry Epstein thing. Is it Jerry?
Yeah.
Jeffrey Epstein. That's all a meme. How's that retarded? If they're very clearly exposing the idea that he was not, he did not commit suicide.
That's fine, but I'm talking about this.
That's
like,
not the only instance of this, though. You can't entirely shut down the idea that that